Have you ever wondered if success in investing is reserved only for financial geniuses? What if someone proved that anyone, with the right tools, could become a successful trader? That's exactly what Richard Dennis did when he challenged the rules of the market and created one of the most curious and groundbreaking experiments in financial history, the turtle trader. His journey not only uncovered the mysteries of the market, but also demonstrated that extraordinary success is within reach for those who are dedicated to learning and applying smart principles. Get ready to discover how this story can change the way you view the world of investing. Who was Richard Dennis, and why is he known as the Prince of Traders? Richard Dennis is a name that deeply resonates in the world of finance, widely recognized as the Prince of Traders, and this title is well deserved. Born in 1949 in Chicago, Dennis began his journey with modest resources, but in a few years, he turned a small loan into a fortune worth millions. He was a master of futures trading, a type of investment that, at the time, was seen as risky and mysterious. But Dennis saw extraordinary potential. What is most intriguing about his journey is his unique approach. Dennis believed that success in trading wasn't just about innate talent, but something that could be taught. His ability to decipher the complex phenomena of the market stemmed from a balance of sharp intuition and strict discipline. He challenged the idea that only a few geniuses could triumph in such unpredictable market. In his youth, Dennis worked as a runner on the Chicago Stock Exchange, a place full of energy and incredible stories. He observed everything around him with a curious eye, absorbing every detail. At 23, he made a risky decision. He used $1,600 in borrowed money to start trading in the futures market. Just a decade later, he had accumulated over $200 million, cementing his reputation as one of the most influential minds on Wall Street. His nickname, the Prince of Traders, also reflects his ability to simplify what seemed incredibly complex. He was the type of figure who intrigued both novices and veterans alike. One example of this was his innovative philosophy, which combined technical analysis with a deep understanding of market psychology. Dennis believed that markets were driven not only by numbers, but by predictable behavioral patterns, a forward-thinking concept for his time. Another aspect of his fame was his humble lifestyle. Despite being extraordinarily wealthy, Dennis maintained simple habits and loved to share knowledge. He was seen more as a mentor than a distant mogul. His methods not only revolutionized the financial market, but also inspired generations of traders and investors to explore new paths. The most iconic contribution of his career was the turtle traders experiment, where he put his theory into practice, proving that anyone with the right tools could become a successful trader. But Dennis' impact goes beyond that. He transformed the way people viewed the market and opened doors for innovative approaches. Thus, his legacy began to grow. What seemed like just another personal success story turned into a landmark in financial history. But this was just the tip of the iceberg, as the turtle traders experiment would be the true confirmation of his ideas. Richard Dennis's investment philosophy. How he challenged the status quo of finance. Richard Dennis had an intriguing view of the financial market, challenging what was considered normal for his time. He believed the market was not dominated by luck or those with innate talents, but by those with the discipline and patience to follow smart methods. For Dennis, the market was like nature, full of hidden patterns and surprising phenomena, but that could be deciphered with persistence and study. One of the pillars of his philosophy was a focus on trends. He believed that financial markets moved like waves in the ocean. Once a trend began, it could be ridden for a long time. This extraordinary concept led him to develop methods based on technical analysis, identifying key moments to enter and exit trades. The idea of following the trend became his trademark and forever changed how traders viewed market behavior. But there was a curious detail. Dennis did not believe in acting on instinct. He argued that decisions should be based on clear and objective rules. This method, though innovative, seemed cold to many investors of the time, who relied on feelings or emotional speculation. However, he proved that a solid system was more effective than any guesswork. It was a historical approach that challenged Wall Street's dogma. A practical example of his philosophy was his systematic use of risk management. Dennis knew that the market was unpredictable, so he always limited his losses. He often said that protecting his capital was more important than chasing quick profit. This intelligent strategy allowed him to avoid the fatal mistakes that took down many traders. Amazingly, this simple lesson is still ignored by many investors. Additionally, Dennis had a rare ability to observe human behavior in the market. He saw how fear and greed influenced prices, creating repetitive cycles. For him, the successful trader was one who learned to resist these emotions and followed their plan with discipline. It was almost as if he saw the market as a psychological game, where those who controlled their reactions had an advantage over others. Another fascinating aspect was his belief that knowledge was one of the most powerful tools. Dennis didn't just want to trade, he wanted to teach. His vision that anyone could master the market if they had the right methods was revolutionary. He was a mentor who demystified trading, showing it wasn't an exclusive club for geniuses. With this philosophy, Dennis not only built an impressive fortune but also redefined what was possible in the financial market. And it was this innovative vision that set the stage for one of the most extraordinary experiments in trading history, the turtle traders, an idea that would test all his theories. The turtle traders experiment, a success test based on methods and discipline. The turtle traders experiment is one of the most extraordinary and curious stories in the financial market, solidifying Richard Dennis's legacy as a visionary mentor. In 1983, Dennis decided to test his belief that anyone with the right methodology could become a successful trader. Inspired by turtle farms he saw in Singapore, he named the experiment the Turtle and embarked on a journey that would challenge the fundamentals of trading. The idea stemmed from a bet with his business partner, William Eckert. Eckert believed that success in the markets was an innate skill, while Dennis argued that it could be taught. To prove his point, Dennis announced he was recruiting ordinary people to train them in his trading technique. The result was a diverse group. Teachers, musicians, engineers, and even a board game player were selected. The criteria: a curious, intelligent profile, and a willingness to learn. The training for the turtles was rigorous but simple. Dennis shared his trend-following and risk management rules, emphasizing the importance of strictly adhering to the system without giving in to emotion. One of the key lessons was the concept of margin of safety. He taught his students to set clear limits for losses, ensuring that no individual mistake could jeopardize all their capital. This innovative approach showed the power of discipline in the financial market. A fascinating detail was the focus on simulations and real-world practice. Dennis believed that theory only made sense when applied in the real world. He gave the turtles a significant amount of initial capital to trade with and required them to follow his rules, regardless of daily fluctuations or fear of losses. It was an intense hands-on experience that separated those who trusted the method from those who succumbed to psychological pressure. The success of the experiment was incredible. Within a few years, many of the turtles had turned their initial capital into millions of dollars. What seemed impossible became living proof that well-structured methods outweighed intuition or prior experience. More importantly, the experiment shattered the belief that the market was a game reserved for the few privileged. Dennis showed that any disciplined person could excel. Curiously, not everything was smooth sailing. Some participants failed to follow the rules, giving in to emotions and sabotaging their own results. This reinforced Dennis' point. Success depended more on the ability to follow the system than any other factor. For him, a clear and disciplined system was the true secret to navigating the market's mystery. This extraordinary experiment not only transformed the participants' lives but also shaped the future of trading. The turtles showed that, with a reliable method, even a chaotic market could be deciphered. However, the principles Dennis taught would continue to be tested over time, especially in an ever-evolving market. The key principles taught to the turtle traders, the principles Richard Dennis taught the turtle traders, formed the foundation of an extraordinary system that proved effective in the financial market. His lessons went beyond simple techniques. They were a set of structured rules that, when followed with discipline, transformed how traders viewed the market. At the heart of this method was a balance between simplicity and intelligence, enabling even beginners to achieve incredible results. The first fundamental principle was trend identification. Dennis believed that markets moved in clear patterns, and once these trends were identified, they could be ridden for long periods. The turtles were taught to enter positions only when a trend was confirmed. For example, they used price breakouts at historical levels as an entry signal, ensuring they were aligned with the prevailing movement. Another essential lesson was risk management, which Richard Dennis considered the true pillar of success in trading. He emphasized that protecting capital was more important than any immediate profit. the turtles learned to never risk more than a small percentage of their capital on a single trade, creating a shield against catastrophic losses. This influential approach is still used by traders worldwide. Diversification was also part of the teaching. Dennis encouraged the turtles to trade in different markets, such as commodities, currency, and stocks, to dilute risks. He believed that smart diversification not only protected against negative fluctuation, but also opened up extraordinary opportunities in different areas. For example, while the wheat market might be down, oil could be on the rise. Discipline was another central aspect of the training. Dennis made it clear that following the rules was more important than being right. He would say, "You don't need to predict the future. You just need to react to the present." This principle challenged traders to trust the system, even when their emotions told them otherwise. The idea of ignoring feelings of fear or greed and focusing on facts was one of the biggest challenges, but also one of the greatest lessons. The turtles were also trained to deal with volatility. Dennis taught them to adjust position sizes based on market volatility. Practically, this meant investing less in riskier markets and more in stable ones, creating an intelligent balance that increased the chances of success. It was an innovative approach that provided security without losing opportunity. Beyond practical rules, there was an underlying principle guiding all the teaching. Patience. Dennis emphasized that the market rewarded those who knew how to wait. He would say that many traders lost money because they were impatient, giving up too early or entering too late in a trend. This seemingly simple principle was a differentiator between success and failure. These fundamentals made the turtle traders an extraordinary case in financial history, but their application didn't stop there. What Dennis taught continued to influence traders for decades. However, the lessons the turtles learned would still face new challenges in an evolving market, demonstrating how adaptation is as important as discipline. Dennis' innovative strategies and how they shaped modern trading. Richard Dennis' strategies were more than investment. They represented a true break from traditional market practice. He introduced an extraordinary approach that combines simplicity with a deep understanding of patterns and trends. These ideas shaped modern trading and continue to inspire curious and intelligent investors worldwide. One of Dennis's most innovative strategies was the concept of following trends. He believed that the market provided clear clues about its future intention, and by identifying and riding these trends, it was possible to profit consistently. This idea, which seemed counterintuitive to many at the time, challenged the traditional approach of buy low, sell high. For Dennis, the opportunity lay in riding the wave, not in trying to predict the exact moment it began or ended. The use of automated systems was another historic contribution by Dennis. Although technology in the 1980s was limited, he was already using systematic calculations to define entry points, exits, and risk management. These systems, based on clear mathematical rules, eliminated the emotional influence of decisions, which he believed was essential for success. This approach was a precursor to the quantitative strategies used by investment funds today. Dennis was also a pioneer in adapting to market behavior. His strategies were not static. He adjusted parameters for different levels of volatility and liquidity. For instance, in highly volatile markets, he would reduce his positions to limit risks, while in more stable periods, he would increase his bets. This flexibility was an innovation that many traders still struggle to incorporate. Another strategy that shaped modern trading was capital management. Dennis taught that it wasn't enough to identify good opportunity. It was crucial to know how much to risk on each trade. He established a simple yet smart rule: never risk more than 2% of your capital on a single trade. This principle helped protect traders from devastating losses and promoted longevity in the market. The simplicity of his strategies was also a differentiator. Dennis believed that any system that was too complicated was doomed to fail, as it would be difficult to apply consistently. He often said, "The market is complicated enough. The system doesn't need to." This lesson, though it may seem obvious, is still ignored by many investors who try to reinvent the wheel. These strategies also paved the way for the professionalization of trading as we know it today. Dennis' emphasis on discipline and systematization inspired a generation of traders to adopt more structured practice, many of which are taught in courses and used by large financial institutions. His influence went beyond the market, redefining the very concept of success in the world of investing. The impact of these ideas remains relevant today. Dennis' lessons continue to be studied and applied. especially by those seeking innovative ways to explore the mysteries of the financial market. However, the true test of his strategies lay in their practical application, as seen in the performance of his famous turtles over the years. Success versus failure. The performance of the turtle traders over time. The turtle traders became one of the most influential and fascinating experiments in financial history. The group's early performance was extraordinary, validating Richard Dennis' theories about the possibility of teaching anyone to become a successful trader. However, as the years passed, the trajectory of the turtles showed that success in trading goes beyond techniques and rules. It also depends on factors like adaptability, discipline, and mindset. In the early years, the turtles' results were impressive. Many of the participants turned the initial capital provided by Dennis into millions of dollars. Their trades were based on the principles of trend following, risk management, and diversification, and these methods proved to be incredibly effective, especially during volatile markets. In a fast-changing environment, the turtles managed to capture large market moves and consolidate significant profit. One curious case was the impact of the commodities market on the turtles' performance. In the 1980s, the market was marked by clear trends and well-defined moves, which favored the strategies taught by Dennis. However, as markets evolved and became more fragmented, some turtles faced difficulties replicating the same level of success. This showed that, while the method was influential, it needed to be adjusted to keep pace with the natural changes in the market. Discipline, or lack thereof, also played an important role in the divergent results among the turtles. Those who strictly adhered to Dennis's rules continued to see consistent returns over the years. On the other hand, some abandoned the basic principles or succumbed to emotional pressure, resulting in significant losses. This reinforced the idea that the system alone is not enough. The operator needs to be able to execute it accurately. Another fascinating point was the impact of the turtles' personalities on their results. Although all had received the same training, the most successful traders were those who possessed a resilient and curious mindset. They were willing to continuously learn and adapt Dennis' strategies over time. This innovative approach helped them overcome the limitations of the initial system and thrive in more challenging markets. Over the decades, some turtles became influential figures in the financial market. They founded their own investment funds, applied variations of Dennis' teaching, and gained recognition for their disciplined approach. Others, however, left trading altogether, frustrated by the challenges of replicating the initial success in more complex market scenarios. This dichotomy between success and failure is proof that extraordinary methods can open doors, but true success in the market requires more than a solid system. It demands the ability to adapt, emotional intelligence to handle inevitable losses, and curiosity to continue learning. The story of the turtle, in all its complexity, is a powerful reminder that even the best methods need to be adjusted to new reality. And so, while some turtles continued to shine, the focus returned to Richard Dennis and his influence on the global market. His teaching and innovative mindset would leave marks that would go far beyond the original experiment. Richard Dennis' influence on the global financial market. Richard Dennis wasn't just a successful trader. He became an icon whose impact shaped how the financial market operates today. His ideas, methods, and philosophy created an extraordinary legacy that goes far beyond the turtle trader's experiment, influencing not only individual investors but also large financial institutions around the world. One of Dennis's most interesting contributions was the popularization of systems based on clear, objective rules. Before him, many traders relied on intuition or poorly structured methods. Dennis challenged this approach, showing that discipline and consistency were the keys to success. Today, this mindset is widely adopted by investment funds, brokerage firms, and individual traders, creating a new era of systematic intelligence in the market. Risk management, another pillar of his philosophy, became a standard in the financial market. Before Dennis, many traders neglected careful loss management, which often led to catastrophic bankruptcy. By demonstrating that protecting capital was more important than seeking quick profit, Dennis helped establish practices that are now considered essential in any professional investment strategy. Dennis' influence can also be seen in how modern traders approach market psychology. He was one of the first to emphasize that success depended as much on emotional control as on technical knowledge. This influential perspective was incorporated by institutions worldwide, who began offering psychological training for traders to help them cope with fear, greed, and pressure. In academia, Dennis' impact is equally impressive. Many of the principles he introduced, such as trend following and portfolio diversification, have been studied and adapted in financial research. Universities began teaching these concepts in economics and finance courses, making Dennis' innovative vision a part of the curriculum for generations of future investors. Curiously, his influence also transcended futures market, where he started his career. Dennis' lessons were applied to stock, currency, and even cryptocurrency markets. His trend-following method proved incredibly effective in assets as diverse as oil and Bitcoin, showing that his ideas had a much broader reach than he may have initially imagined. Dennis also made a historic impact on how the general public perceives the financial market. Before him, many considered trading something inaccessible, reserved only for the elite. By teaching ordinary people in the turtle experiment and proving that they could succeed, he broke barriers and popularized the idea that the market was for everyone. This democratization opened doors for a new generation of curious and influential investors. Finally, his influence remains alive in debates about ethics and responsibility in the market. Dennis wasn't just a skilled trader. He was someone who believed in the power of education to transform lives. His legacy is a reminder that the financial market doesn't need to be a space of mystery and exclusivity, but a place where knowledge and discipline can create extraordinary opportunity. This legacy, however, is not without its challenges. As markets evolve, Dennis' principles face constant tests, requiring adaptation and innovation. But even in a changing world, the essence of his lessons remains timeless, inviting investors of all levels to explore their own limits. What can we learn from Richard Dennis' legacy and mindset? Richard Dennis' legacy is a true manual of timeless lessons for anyone looking to understand and explore the financial universe. But the most extraordinary part of his story is that his ideas go beyond the market, offering valuable insights into discipline, resilience, and the pursuit of excellence. Learning from Dennis is more than understanding his strategy. It's adopting an intelligent and curious mindset that can turn challenges into opportunity. One of the first lessons Dennis teaches us is the importance of a well-defined system. He proved that clear, objective methods can outperform instinct or chance. This doesn't mean you need to be a genius to succeed, but you need a structured plan and the courage to follow it, even when emotions try to divert your focus. Applying this to daily life, think about creating a system to achieve your goals, from saving money to developing a new skill. Another powerful lesson from Dennis is the value of discipline. He always emphasized that in the financial market, following the rules was more important than trying to predict the future. This principle is as applicable to the real world as it is to the market. Consistency in your efforts is what defines your success, whether in work, studies, or relationships. It's like planting a tree. You don't see immediate results, but with patience and care, it blooms. Risk management, a pillar of Dennis' method, also carries universal wisdom. He reminds us that protecting what we've already gained is just as important as seeking new opportunities. In everyday life, this might mean balancing ambitions with security, whether in financial planning, career choices, or personal decisions. After all, risking everything at once can be exciting but rarely smart. Dennis also teaches us how to handle failures and losses. He knew that even the most influential traders faced setbacks, but the secret was learning from them and moving forward. This lesson is essential in any area of life. Instead of fearing failure, treat it as an opportunity for growth. Imagine, for example, starting a new business that doesn't succeed. What you learn in that journey could be the springboard for the next big success. Humility is also part of his legacy. Despite his wealth and fame, Dennis remained approachable and willing to share his knowledge. He believed that the market was not an exclusive space, and with the turtle experiment, he proved that anyone with the right tools could thrive. This reminds us that true power lies in empowering others, whether at work or in your community. Another fascinating lesson is the importance of curiosity. Dennis was always an explorer, seeking to understand the mysteries and phenomena that drove markets. This unceasing curiosity is a quality that we can all cultivate. In a constantly changing world, those who stay curious and eager to learn have an extraordinary advantage. Whether exploring new technology, learning a language, or understanding market trends, curiosity can be your best ally. Finally, Dennis' mindset inspires us to strike a balance between ambition and reality. Key didn't see the markets as an easy path to quick riches, but as a space of opportunities for those who worked with intelligence and perseverance. This vision encourages us to dream big, but with our feet on the ground, enjoying the best of both worlds. Thus, Richard Dennis's legacy remains alive as a practical and inspiring guide. But the lessons he left us are not a final point. They are an invitation to continue learning, exploring, and innovating, both in the financial markets and in our lives. How to apply the turtle trader's teachings to your own investment strategy. The teachings of the turtle trader, passed down by Richard Dennis, go far beyond the simple market experiment. They are a collection of smart principles that any investor can adapt to create a solid and effective strategy. From beginners to the most experienced, there is something extraordinary about this method that resonates with anyone seeking success in the financial world. The first step to applying these teachings is to adopt an approach based on clear rules. The turtle method stood out by eliminating the influence of emotions on decision. In the real world, this means establishing objective criteria for buying, selling, or holding investment. For example, you could decide to invest only in assets with a consistent history of growth, or sell any stock that falls below a certain value. Risk management, taught as a pillar by the turtles, is essential for any investment strategy. The basic rule is simple: never risk an amount that could jeopardize your portfolio. In practical terms, this could mean diversifying your investments across different sectors or limiting the amount invested in high volatility. This practice protects your capital from significant losses and gives you the peace of mind needed to trade intelligently. Another applicable lesson is the concept of following trends. Like the turtles, you can observe market movements and identify patterns of up or down trends before making decisions. Technical analysis platforms like TradingView offer tools to visualize these trends. For example, if a specific sector, like clean energy, is on the rise, this could be an opportunity to invest based on the prevailing trend. Patience is also a virtue highlighted by the turtle, and is something you can incorporate into your strategy. Many investors act impulsively, buying or selling based on news or emotion. However, waiting for the right moment can make all the difference. Think of an investor who buys shares in a promising company during a downturn and holds them for years until their value skyrockets. This is the essence of following trends with patience. Flexibility is another valuable lesson. The turtles adjusted their positions based on market volatility, and you can do the same. For instance, if the markets are extremely volatile, it may be wise to reduce your exposure and adopt a more conservative approach. On the other hand, in more stable market, you can gradually increase your investments in more secure and consistent assets. Additionally, continuous learning is a hallmark of Dennis' teaching. The turtles didn't just follow rules, they were constantly improving. This means you should seek knowledge about different asset classes, new market trends, and even alternative strategies like index funds or startup investment. Reading books like The Zurich Axioms or The Intelligent Investor can broaden your perspective. Finally, the idea of starting small but thinking big is a practical way to apply these teachings. The turtles started with relatively modest initial capital, but achieved extraordinary results over time. Even with a limited budget, you can invest consistently and allow compound interest to work its magic. The secret is to take the first step and trust the process. These principles, adapted to your own circumstance, can transform your approach to investing. But there's always more to learn, and exploring the curiosities and stories behind the turtle trader's experiment can inspire even more ideas for success. Curiosities about Richard Dennis and extraordinary stories from the experiment. The story of Richard Dennis and the turtle trader's experiment is filled with fascinating moments and curiosities that highlight how extraordinary this initiative was. Besides revolutionizing the world of trading, the experiment also brought to light inspiring stories, unexpected lessons, and of course a good dose of mysteries about how people react when faced with money, discipline, and risk. One of the most well-known curiosities is the inspiration behind the name turtle trade. During a trip to Singapore, Dennis observed turtle farms and was impressed by the methodical process of training these animals to grow in a consistent and predictable way. He decided he wanted to cultivate traders in the same way, believing that with the right training, anyone could succeed in the market. Another intriguing fact is that the candidates for the experiment came from all walks of life. Dennis recruited musicians, scientists, engineers, and even a professional board game player. None of them had prior trading experience, which reinforced the idea that success in the market didn't depend on an innate skill. During the interviews, he looked for people with logical thinking and a curious mind, but who could also follow rules with discipline. One of the extraordinary stories was the initial performance of the turtle. Many of them started with just a few $1,000s and, within months, multiplied those values impressively. One of the most successful turtles turned his initial capital into millions within a few years, proving that Dennis' theories about teaching trading were more than valid. Curiously, Dennis didn't train the turtles just with techniques. He also taught life lessons, such as how to handle fear and greed emotions that often sabotage financial decisions. He used curious analogies, like comparing the market to a stormy sea. If you try to fight it, you'll be swallowed. But if you learn to navigate, you'll reach your destination. Another interesting curiosity is that, despite the success of the experiment, not all turtles thrived. Some abandoned the rules Dennis taught and suffered significant losses. This highlighted one of the most important lessons of the experiment. Even with the best system in the world, success depends on an individual's ability to follow it with discipline and consistency. Moreover, the turtle traders' experiment became a milestone in the debate over emotional intelligence in the financial market. Once, Dennis reportedly said, "Trading is not about making money, it's about surviving first." This mindset profoundly influenced how the turtles approached the market, teaching them to value longevity and control over the urge to take unnecessary risks. Finally, the cultural impact of the experiment was so great that it inspired books, movies, and even courses seeking to replicate Dennis' teaching. Although markets have changed since the 1980s, the story of the turtle traders continues to be a source of learning and inspiration for traders and investors worldwide. These curiosities show how Dennis's legacy transcended his time, opening doors for new ideas and keeping the spirit of innovation alive in the financial market. With that, we conclude one of the most influential and fascinating stories in the investment world. Now that you know the inspiring story of Richard Dennis and the turtle trader, it's time to apply this knowledge to your own life. What steps can you take today to develop discipline, adopt effective risk management, and follow trends in your daily life? What is stopping you from turning your curiosity into action and exploring the extraordinary potential of the market? If this content sparked something, subscribe to the channel, activate notification, and keep following more stories and strategies that could change your perspective on finance and investment.